Hey there. I got the question the other day as to whether or not rising interest rates are good for the stock market. And, my opinion is that it depends. As most of you know, Jerome Powell, who is the head of the Federal Reserve, I like to call him King Powell, he's literally the most powerful man in the world, more powerful than the president, any kings. And believe me when I say that, people call him J. Powell. But anyway, he came out on Wednesday after the Fed wrapped up its two-day meeting and came out with the approach for interest rates over the next year or so. And basically, look, the Fed is going to remove quantitative easing, right? It was sort of emergency funding that was in place for the pandemic. They're going to remove that. I think most people think that's appropriate, and they'll do that over the next 2 or 3 months. And then he also telegraphed that they'll probably raise rates three times over 2022 and then sort of go from there. And I thought it was a very balanced approach. I think he was very balanced, very measured, and the markets reacted accordingly. They liked what he said, and so the markets were up big on Wednesday, and then they pretty choppy yesterday, and so. What I think it did is just remove just another factor of uncertainty, from the narrative. And markets really hate uncertainty. And so whenever there is uncertainty, whether it's with variance or, China or the Fed or whatnot, I mean, they markets don't like that. And so that's just another piece of uncertainty that was removed. And where we go, we'll see. Whether we can stabilize and start to move up, but hopefully, we get back to a place where, companies are actually judged on its merits rather than, everything just being sold ad nauseum, no matter what, no matter good companies, bad companies. That's sort of what's been going on, for the last month or so, as I see it. And the indices don't reflect that. Indices are still sort of pushing all-time highs, but if you look at the Russell 3000, I saw a stat saying that, like 10 or 20% are down, 10 or 20%, and then there's almost like a third of the Russell 3000 that's down over 50%. So there's a lot of carnage underneath that belies the indices hitting all-time highs. And so, where we go from here, I think that, stocks can outperform in a rising rate environment. Because I don't think the pace of rates rising is that accelerated, but we'll see. We'll see. I think again, the approach is always to buy good companies at good valuations, run by good management, and that's to hold and sit tight.